Welcome back to Alpha Recap, your quick, no-nonsense wrap of the market action. We recorded this after the close on Friday, into the long weekend. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Big day in the microcap world. And when I say big, I mean explosive moves that really had nothing to do with the broad market. It was all niche names today.
Right. So, what really stands out here is the trio. One tiny stock rocketed up about 125% to $1.50 on enormous volume. Another plunged roughly 77% to 36 cents. And a third logged almost 1 billion shares traded while finishing down about 6% to 16 cents. Wild stuff.
Those are stunning headlines. The rally, up about 125%, happened on roughly 274 million shares. For context, that's a huge participation number for a low-priced name.
And the collapse, down about 77%, printed about 7.5 million shares. Not as many as the winners, but the percentage move was brutal.
Yeah, and that near billion share print, roughly 960 million shares, on the other stock made it the most actively traded name of the day, even though it finished down. So you had winners, losers, and ultra-high turnover all mixed together.
I mean, when you step back and look at this, it was a pure microcap volatility day. Momentum clearly showed up. Several names ran double or triple digits. One jumped about 129% to roughly $3.30. Another rose about 87%, but only on light volume, around 13,000 shares.
That contrast, massive volume on some, tiny prints on others, is important. Heavy volume suggests broad participation, maybe retail or prop desks. Tiny volume rallies are trickier. Execution risk is huge if you try to trade into those moves.
Exactly. Liquidity matters. If the only way a stock goes up is on a couple of thousand shares, price discovery is fragile. Analysts note that these moves often lack confirmed corporate announcements in the briefs, which raises event risk until filings or press releases show up.
Hold on, say that again? Lack of confirmed news increases event risk. Simple point, but crucial because over a weekend there's nothing traders can do until markets reopen. So any filing or halt over the break can reshuffle positions.
Right. And that weekend risk premium was real here. With the session rolling into a long weekend, expect more headline risk when markets reopen. People will be watching SEC filings, issuer press releases, and any quote corrections.
And we also saw some absolutely savage one-day collapses besides that 77% move. One name printed a close that rounded to 0, which screams quote irregularity or a reporting glitch. Analysts suggest checking for halts or corrections when the market reopens.
Yeah, that one printed down about 42% to essentially 0 on light volume. Not what you want to see in the tape. Those sorts of prints often trigger regulatory scrutiny or forced liquidations.
Right. And a single session drawdown of 70% plus can wipe out most market value. It can cause margin events and cascade into wider selling. So the scale of loss matters as much as the percent itself.
Quick pause. Short reactions. Big move.
Not what anyone expected.
Okay, back to the theme of retail attention. Google Trends flagged a spike in searches for the Dow Jones. Searches jumped to 10,000, which the briefs flagged as about a 200% increase versus baseline. That's a broad retail signal.
Yeah, that's interesting. A 200% jump in Dow searches doesn't directly explain microcap moves, but it signals heightened retail interest. Analysts note retail attention tends to feed trading flows, sometimes into megacaps and sometimes into speculative small caps.
Which is why we saw volume concentration. The two names I mentioned earlier combined for well over 1 billion shares. That kind of turnover in low-priced names points to either concentrated retail action, algorithmic flow, or event-based positioning.
And higher volume plus extreme price dispersion implies crowded directional positioning in some spots and scattered bets in others. The result is big implied volatility spikes and wider spreads when options markets reprice.
Exactly. Expect active pre-market prints, early halts, and wider spreads on Monday in those names.
On the consumer front, a Yahoo note in the briefs warned about 3 consumer stocks, pointing to pressure from retailers, tech investments, and a flat 6-month performance versus the S&P. It even cited UPS as an example of operational pressures.
Right. The message there was caution. When big, established retail names face margin pressure from tech spending, some retail traders reallocate to higher beta microcaps, chasing outsized returns. Analysts say that rotation can amplify the volatility we just saw.
Totally. So you get steady index performance on one hand and speculative surges on the other. It's a divergence driven by different investor goals. Long-term index investors versus short-term momentum or retail traders.
Rapid fire. A few quick desk notes from Friday. One stock was up about 129% to roughly 330 on about 206 million shares. Another rose about 21% to 9 cents on roughly 725 million shares. One name up about 87%, finished around 3 cents on tiny volume. And the heavy hitter we mentioned logged roughly 960 million shares, while slipping about 6% to 16 cents.
And the big losers beyond the 77% print, one fell about 41% to 5 cents on under 50,000 shares, and another printed a weird 0 close on low volume. Check for quote corrections, definitely.
Analysts are flagging 3 emerging patterns: elevated microcap dispersion, concentrated volume in low-price names, and information asymmetry. Many big moves lacked confirmed corporate announcements in the briefs.
Which means weekend filings are likely. What should people watch when markets reopen on Monday, April 20th? First, SEC filings and corporate press releases. Look for reverse splits, financings, regulatory notices, or late-breaking news explaining these swings.
Second, check pre-market volume and halt status. Especially for the names with odd prints, there may be quote adjustments or resumed trading at materially different levels.
Third, options markets. Heavy equity moves often show up first in options flow. Expect spikes in open interest and implied volatility in the names that ran or collapsed.
And fourth, broader retail flow. Keep an eye on search trends and social sentiment. If that Dow search spike persists, it could translate into renewed broad retail activity, sometimes into index names, sometimes into these speculative plays.
Short reactions. Watch filings.
Check pre-market.
Expect wider spreads.
A couple of practical explanations in plain English. Momentum trading means people are piling into stocks that are already moving, which can create self-reinforcing rallies. Low liquidity means a small number of shares can move price a long way. And information gaps, no confirmed news, means anyone holding through the weekend is exposed to surprises when filings hit.
Yeah, it's the classic microcap cocktail. Momentum, low float, and rumour or noisy signals. Analysts note that until filings or issuer statements show up, it's hard to separate true, durable change from pure speculation.
Quick note on language. We're sharing data and analysis for informational purposes only. This is not a recommendation to buy, sell, or hold any specific security, and it's not personalized investment advice. Analysts say past moves and search trends reflect what happened, not what will happen.
Final takeaways. 1. Friday was dominated by microcap volatility and big dispersion, not broad market themes. 2. Volume prints were extreme in some low-priced names, which raises liquidity and execution risks. 3. Information gaps mean expect filings, halts, and quote corrections over the weekend and into Monday. And 4. Monitor options and pre-market activity for early clues.
If you have questions about anything we covered today, head to stockalpha.ai. where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back with more after we see how the tape settles on Monday. Bye for now.